Chinese cash, it's turning into kryptonite. Around the world, Chinese investors are facing bans and Chinese investments are going bust. The losses are piling up. Remember, Chinese companies were on a buying spree right before the Wuhan virus outbreak. After the outbreak, they tried to capture assets with hostile takeovers across the globe. All of these investments are now running into losses, and new deals are increasingly looking unlikely. China's biggest groups are struggling in a post-pandemic world. In 2015, Chinese conglomerate Fosun International had made a major investment. It had put money in Cirque du Soleil Entertainment, the company that produces the world-famous circus by the same name. Now, Cirque du Soleil is struggling. Fosun International's investment has been wiped out. The company is under a mountain of debt. Creditors are taking control of it. In 2014, Chinese firm Honi Capital had bought Pizza Express, a global chain of pizza outlets. The deal was worth $1.54 billion. A British business had gone into Chinese hands. Now, 6 years later, a group of British creditors wants the company back. China's Honi Capital cannot keep up with the payments. Reports say the Chinese company will return Pizza Express to the British. We've often reported on how China is trapping countries with debt. But here we have two Chinese companies which have lost control of their crown jewel acquisitions due to debt. And this is not a sporadic case of cruel irony. This is the tip of China's debt iceberg. China has a huge debt problem. According to a report, the Chinese economy is bracing for many defaults. China's bond market is worth over $4 trillion. Chinese economic recovery has been fragile so far, so it is not in a position to save many distressed borrowers. There will be defaults. Companies could fall like pieces of dominoes. Debt papers worth well over $500 billion are set to mature by the end of this year. And according to a report, the Chinese government has neither the firepower nor the will to backstop all of it. China's total domestic debt hit 317% of its GDP. 317% of its GDP. For the longest time, China has fueled its growth using debt. A lot of the borrowings are off the books. The hidden government debt could be around $4.2 trillion. The Chinese state is running out of cash, but it faces no dearth of bad news. More Chinese companies are being blocked from takeovers abroad. The latest setback comes from Australia. The country's Lion Dairy and Drinks wanted to sell to a Chinese firm, Mengniu Dairy. But those plans have been shelved. This deal had regulatory approval. But the Treasurer of Australia, Josh Frydenberg, objected to the agreement. He said that the deal will be, quote-unquote, contrary to national interest. The Chinese firm saw the writing on the wall. It pulled out of the deal. So basically, we've told you three stories. And let me sum them up for you. One, Chinese firms are losing control of their assets abroad. Two, Chinese bond markets are staring at a collapse. And three, a Chinese company shelved a takeover in Australia. You can join the dots and you'll get the big picture. Economic distancing from China, that's what the world is doing.